Okay, we're going to go ahead and get started. Again, we appreciate you joining us. Again, my name is Jennifer Young and I'm with University Credit Union. I am the sales manager over the mortgage team, and joining me today is Conrad Harding. He's one of our mortgage consultants.
Good morning, everyone. I hope you're having a great day so far.
We apologize, we were scrambling last minute. We've had some issues with our internet this morning, but I'm going to ask a favor of each of you. If you do have questions, we're going to encourage you to ask the questions throughout the presentation, and then we'll stop periodically to answer those questions. You'll notice on your screen where there's a questions tab. You can go to that, type in your question, and we'll monitor those throughout the presentation. But primarily our presentation today is to give you an idea of what to anticipate as a first-time home buyer, the process of the loan and the process of the contract, the real estate contract, what to anticipate, what the steps are, and answer some of the questions that you might have. So we're going to dive right in and get started. The loan programs that we have available with the University Credit Union range from conventional, FHA, VA, fixed rates, adjustable rates, short-term and construction, as well as jumbo loans. And we'll explain a little bit in detail of each of those as we go throughout this presentation.
So when you're ready to purchase a home, there are a few things that you want to anticipate and expect throughout the process, especially if it's your first time purchasing. Initially, you want to get your application started. That allows you the ability to acquire a pre-approval letter, and at that point you're able to search homes and make offers. Once you've found a home that you would like to purchase, you can make your formal offer, and at that point we'll issue approval through underwriting, order the appraisal and title work, and then proceed to get you to closing.
There are a lot of variables that you can anticipate that are going to affect your payment, and we want to cover just a few of those. Obviously, the down payment is going to have a big impact of what your payment is going to be. Also, if you choose to purchase a condominium or a townhome, you may have what's called HOA fees. Those are homeowners association fees, and those would impact your overall monthly expense. And we want to make sure that you're prepared for those. PMI insurance is private mortgage insurance, and those are on conventional loans. Anytime you put less than 20% down on the home, you would have this PMI insurance. Property taxes and homeowners insurance also have a big impact on your monthly payment, and those are tied directly to the property. So property taxes depends on where you're at in the state or in the valley, depending on what the home is. That's a variable. And then your homeowners insurance is up to you to decide what company you want to go with, and then we'll just figure that monthly amount into your payment. And credit is probably the single biggest variable that can impact your payment. The better your credit, the better your payment's going to be, because that's what interest rates and PMI insurance are all based off of what your credit score is. So that's a big variable. It's really important to understand that going in.
So just to give you an idea of how much your credit can impact not only your mortgage insurance, but your entire payment, we've got a couple scenarios here for you, one with a 3% down payment and another with 5% down. And as you can see, the credit scores of 740 or higher at 3% down, you're going to be looking at about $160 a month for your private mortgage insurance, whereas with 5% down, you're going to be looking closer to about $100, $105. And then depending on where the scores come in at, will impact that as well.
So you can see on PMI insurance how important your credit is. Also, one of the things to consider is with a credit union, we actually get preferred pricing with the PMI companies. They prefer to work with credit unions because our loans perform better, and so they give us preferred pricing. So you can see here just an example based on a $265,000 with 5% down. If you had a 740 FICO score, with a credit union, your PMI insurance monthly would be about $92, and with any other institution, it would be around $125. So you can see this is really where membership is beneficial for you with your PMI insurance.
So in addition to your monthly payment and down payment, there are a few other factors to consider when purchasing a home. First is closing costs. Closing costs are in addition to your down payment. Next is appliances. Purchasing a home, you may have items like a refrigerator, dishwasher, other items to consider when purchasing. Furniture is another big consideration. If you're upgrading, you may need to purchase more furniture for your new home. Near future repairs would be things like replacing a furnace, water heater, things like that, major appliances. Window coverings is another consideration. A lot of people don't consider things like blinds, drapes, things like that. And if you're purchasing condo versus single family, you always want to consider, again, the HOA dues. If you are purchasing a single family home and you're required to maintain your own yard, you'll want to consider yard tools as well.
Now, we always get the question, especially with first-time home buyers, if you're looking at purchasing a home from one of the major builders in town, so Garbett, Destination, Ivory, those types of builders, they offer to carry the construction loans for you. So you actually don't have to worry about the construction loan itself. When the home is 100% finished, then you're required to go ahead and just do your long-term financing, your mortgage loan. We do offer construction loans for someone that is interested in building a custom home. So if you have a piece of property that you would like to build your primary residence on, then we are happy to work with you. And we actually offer up to 95% of whatever the cost or value of that is that we'll do the construction loan for. So just know, we're not going to cover a lot of this information, but just know we do offer. And if you do have questions, we're happy to reach out and answer those questions on the construction loans.
So why purchase now? In my opinion, any time is a great time to buy real estate. It's a solid investment, one of the best investments you can make. Mortgage rates are at an all-time low right now, still very low rates, and it's never a bad time to buy versus rent.
We've talked about not only interest rates are great. I know that you hear a lot in the market right now stating that rates have gone up and that rates are still really good. And as Conrad mentioned, buying real estate is always a good way to go. Real estate continues to increase on a stable basis, especially in the state of Utah. Things are going really well. So it is always a good time to go. We're going to answer a few questions right now. There are a few questions regarding down payment. And I'm glad to hear those questions come up, because right now is also a really good time to buy, because we do have a new program that we're offering to first-time home buyers, and we would like to cover a little bit of that information at this time. So first-time home buyers, we have a new program available to you that offers 100% financing, which means you don't have to offer or you don't have to come in with a down payment. So the question that was asked was, I don't have a down payment, is there a way that you can still buy? And now your answer is yes, you can. On this 100% first-time home buyers program, it is a true first-time home buyers program. So if you have owned a home before, in any part of your past, we are not offering this program to you. This is truly for those that have never owned a piece of property like real estate. This program offers, we will do a maximum loan amount of $453,100. It is a conventional loan, which is nice. Conventional loans typically are a little bit less expensive than what you hear about government loans, and we'll address a little bit more detail on that as well. The minimum credit score on this program, you need to know, is 680. We will go as low as 680. If you do have a credit score that's lower than that, we will look at other options for you. And so if you have below the 680, talk to us anyway. Let us look at it. Let us see what we can come up with you. And we'll also work with you to try and help raise that credit score if there's any way possible to fit you into this program. So it's most important to consult with us and let us help you through that process. The terms on this first-time home buyers program are 15 and 30-year terms. So you do have options for both of those. And again, as I said, this is a true first-time home buyers program. We do require in this, although there is no down payment requirement, we do require that you as the first-time home buyer have an investment into the transaction of $1,500. And so that $1,500 would go towards your closing costs, those expenses. The closing costs involved on purchasing a home, a lot of times we do get a question, what do closing costs run? You know, closing costs on each loan are different, and it's really important to just present a scenario to us and let us give you an estimate of what your costs would be. The credit union is very relationship driven, and so our costs are very low as an industry standard. So it's really important to just give us a scenario, let us give you an estimate of what those costs would be. This is first-time home buyers, and it is required that you own or occupy this property. So we don't do second homes and we don't do investment homes on this program. We only do it if you're going to be occupying this as your primary residence. And on this program, last information is we will do not only single family homes, but we will do condominiums, PUDs, and townhomes. A PUD is just a planned unit development. And we will do any of those types of homes on this program. So again, this is a really great opportunity for first-time home buyers to look at purchasing a home without a down payment and be able to get in.
So now we're going to cover a little bit of the real estate side of things and give you an idea of what to plan for when you start your home search. The first thing you want to do is make sure that you're looking at resources that have not only a live feed of the homes available, but a source that also updates things in real time. As homes are going under contract and new listings are being put on the market, you want to make sure that you're aware of that information as quickly as possible. A couple other items to consider is a feature referred to as auto send or automatic distribution of new listings that informs you when new listings do become available on the market. Automated updating throughout the process will let you know where you're at and where the homes are at with those specific transactions. You also want to make sure you've got the ability to save your search criteria if you're searching for specific properties or number of bedrooms, number of bathrooms, price range, things like that. It's important to be able to save that search criteria.
So I'm going to throw a little bit of loop in our presentation right now, but I want to show you where you can find this information. So I'm going to ask our IT guy, James, is here helping us today, and I'm going to ask him to adjust the screen a little bit and go to our website. We've just recently updated our website. And so I want you to see where you can find this information, where you can go to ucreditu.com. I know you all know where that is because you've seen our website, you found the webinar. But I want you to see where you actually look to find the home search. If you go to our website and if you hover over the personal tab and go to the home center, then click on that home center. And if you scroll down a little bit, you should be able to see search for homes. And I apologize, we're going to kind of work through this kind of off the cuff too. We've got other things blocking our screen. So if you scroll down and see, we are all learning to now. If you'll go back up to the business, no, go back over to personal. See, this is what you get when you get live. You get us trying to figure out where they've put the new one on our website as well. So I apologize. And you know what? I am not sure where they've got it now either. Well, see here, we've covered all of that information and we're telling you, and we're having our own hard time finding it. Will you log on to yours? Okay, we're going to keep looking so that we can give you exactly where that is, because quite honestly, on the new one, that's horrible to admit, but quite honestly, I'm not sure where we've put that link, and I want to make sure that you have that. Okay, back to the presentation, and we will get that. We'll address that before we finish. We'll get that. I'm going to say, I'll have to look for it. Let's see. Okay. So when you make an offer on a property, again, we're just going to go ahead and start back up. When you make an offer on a property, you're required to put what's called earnest money. And this earnest money is basically a way of telling the buyer or the seller that you're serious about purchasing this home. You've gone through the process, you found a piece of property you really like, or you found a home, you really like it, and you're ready to move forward. And so the earnest money is typically between 0.5 to 1% of the purchase price. Somewhere around that $1,000 to $2,000 mark is pretty customary in the industry. And that earnest money, again, is deposited with the real estate brokerage. They hold it, and that's actually funds that are put towards your total out-of-pocket expense. And so if we do an estimate, we give you an idea that you're going to be required to have $2,500 through the transaction, whatever you put down as earnest money is going to be a credit to you at the closing. And so just know that you're going to get credit for those funds. Those funds are protected by 4 different deadlines throughout the process of purchasing. And those deadlines protect you, the buyer, and they protect that earnest money so that if in case something does happen, that you don't lose out on that earnest money, it's protected. So we're going to go through a little bit more of those in detail, but additionally, there's other things to consider.
So when you're getting going with your realtor, there are a few items you want to be in communication with in speaking with your realtor and loan officer. First, the purchase price. You want to make sure everybody understands what the purchase price will be. Your realtor will go over recent comparable sales or comps with you, market trends, as well as other offers on the property. The down payment is something you'll want to identify with your loan officer to make sure they're understanding how to structure the loan for you. That can impact the loan program that we discuss with you. It can also impact things like your mortgage insurance, interest rate potentially, things like that. The monthly payment would be kind of a broad statement that takes into consideration your monthly principal and interest payment, which is basically just the loan amount, your interest rate, and the term on the loan. It also considers your property taxes, homeowners insurance, any HOA dues, and mortgage insurance, if those last 2 are applicable. The closing costs, your loan officer will cover with you and provide an estimate on those initially in the process, and then have a more exact number closer to closing. And you'll want to have a conversation with your realtor about the seller contributing towards your closing costs.
Okay, I'm just going to throw out, Renee, you are the bomb. Thank you for showing us. I'm going to flip really quick again and show you where you find, it was on our website. I just didn't know where to search. So if you hover over personal and you go down to first mortgages under the home center, go down to first mortgages up there, right down one more. You click on that. If you'll scroll down through the page and you'll find MLS home search, and you can click on search for homes. Now, understand when you do this, you are leaving our website and you are asked to put in contact information, but I want to reassure you that this information is protected. You're not going to get hounded by an agent. You're not going to get contacted. We do have a very good relationship. The agent that takes care of this has agreed not to reach out and hound you. They're there to answer questions for you and help be a partner with you in searching through this. So I appreciate very much. Thank you so much, Renee, for helping us out. See, we have the greatest members. We appreciate that. Before we continue on with the presentation, I'm going to answer a couple more questions that have come up. There is a question, what kind of grant offers are available for first-time home buyers? That's a really good question. Thank you, Ashley, for asking that. There are a lot of independent grant offers with cities. Typically it's by the city. So if you're looking at a certain area, find out what city it's in and contact their city offices to see if they have any grants available. We don't have anything specifically available through the credit union, but we will work with the city grant offers, and you can use those towards the down payment and towards the closing costs involved in the transaction. But it is up to you, the buyer, to go ahead and do the research and find out about those programs. We're not in partnership with any of those. There's another question. The credit score is amazing. Mine, not so good. I totally understand. How much will it help or hurt in the buying process having a lower credit score, and are you better off putting it under a partner's name and just dump the $40,000 that you have saved into your partner's hands? You know what, that's a really good question. We get that a lot, where one person's credit score is a little bit lower and one is a little bit higher. My answer to that is, if you need both of your incomes to qualify, then both credit scores are going to need to be considered. When interest rates and fees are determined, they're determined off of the middle low FICO score. And so, for instance, if you have someone that has 3 credit scores and the middle credit score is 720, and the other person on the application has 3 credit scores and the middle number is 660, we're going to have to go off of the 660, and that's going to determine your interest rate and your PMI insurance. So you need to be aware that, yes, it will hurt, but if you have to have that income, then you're going to have that on for qualifying. Now, if income is not an issue, if you don't need income to qualify, and if the single person qualifies just fine, then proceed that way. One of the suggestions that we give is, you're always welcome. After the closing, the title is held under just the person that's on the loan, and you're welcome to add your name to the property. You can adjust that vesting and put your name on the property so that you're still an owner in it, but you have no obligation on the debt. So I hope that answers. And you know what, if you do have questions on that, reach out to us and let us help you kind of through your personal situation. We're happy to work through that with you. So there's another question really quick. Are foreclosed homes available for 100% first-time home buyers loans? Yes, Tina, that's a great question. Yes, you can purchase a home that's foreclosed. We don't decipher or differentiate between a home that's been foreclosed or not. But the key point there to understand is the home needs to be occupiable. It needs to be livable. And so if you're talking about a foreclosed home that has totally been trashed or that has had major damage done to it, it may not meet the guideline to be financed. And so that's the only thing that you need to be careful with buying a home that's foreclosed, is making sure that it's up to Fannie Mae standards or conventional standards, and FHA as well. FHA requires that as well. So just make sure that it meets those standards and it is livable, that you don't have to go in and do significant upgrading to it to fix it. So hopefully those are some really great questions. So we're going to continue on with the webinar. Through the process of purchasing a home, you can ask for multiple different things. The seller doesn't have to agree to that, but you're free to ask for it. So if you see in their backyard they've got a really great spot and you want it, you can always ask for it. These are personal belongings. There are certain things that are considered personal and certain things that are considered part of the property. And if there's personal items, you can ask for it. It's just up to you to ask for it. Your agent will put it in a separate contract, and you can purchase those things separately.
So the next thing to cover would be what's called a home warranty. This is basically protection for the buyer on future repairs for the home. A lot of sellers will be willing to cover this cost for you. The realtor will have a company that they typically recommend. Title companies may have companies to recommend as well. Average cost for a home warranty can range between $340, $350 up to $450 or $500. It just depends on the specific type of warranty that you select, as well as the company that you end up going with. Most warranties will cover major systems for 1 year, such as the electrical, plumbing, appliance repairs, etc. And if you opt to continue the warranty coverage beyond that, you can purchase the warranty to renew beyond that first year. That would be a cost to you, though. 90% of sellers will pay for this if you ask. As I said before, most expect to pay for that for you. And then again, you can renew this every year on the home.
Okay, as we mentioned, there are 4 key deadlines in the contract, in the purchase contract, and we're going to go over each of those. This is just kind of an overview to give you an idea of what those deadlines look like. So the first deadline is going to be your seller disclosure deadline. That's approximately 3 to 5 days out from and when we talk about 3 to 5 days out, that's 3 to 5 days out from when you initially submit the purchase contract and have an acceptance on it. So once everybody's agreed to it, then the clock starts ticking. So 3 to 5 days out, the seller disclosure deadline. The second is the due diligence deadline, which is 10 to 14 days out. Finance and appraisal deadline, somewhere between 21 to 30 days out. And the final one is the settlement deadline, which is sometime between 30 to 45 days out.
So the seller disclosure deadline is a 6-page document that asks the seller 25 questions about the home and condition of the home. Some examples of the questions asked will be regarding mold, termites, water damage, meth in the home, etc. It protects the buyer in writing in case something isn't disclosed. This is something that you'll review with your realtor, and you can ask any questions you have about the seller's disclosures. You can cover those with your realtor. This is your first opportunity to cancel the contract, not your last.
Okay, the next deadline, again, is the due diligence deadline. And this is where you really get actively involved with making sure that all inspections are done. If you want to have a home inspection, you get with your agent. Your agent is usually really good about having a list of different companies that you can work with. Those range from $300 to $500, and those are your responsibility as the buyer to cover. The seller does not provide these. Any other tests that you want done, if you want any meth or radon or mold tests done. And then at that point, if there's anything on the home that you want fixed, so any repairs, and if you want to make price adjustments, once you do get those inspections back, if you do want to adjust your price or your offer, this is the time that happens. Or if you simply have just decided that this is not the home for you, you have a change of heart and you want to back out, this is your second opportunity to cancel with no problem getting your earnest money back. So there's no financial obligation at this point unless you decide to move forward from here. You might end up with more financial commitment, but at this point, this is your second opportunity to cancel.
Financing and appraisal deadline is the next deadline to consider in the transaction. It's typically 21 to 30 days from the point you've gone under contract on the home. By this deadline, your appraisal needs to have been completed. If you're going to renegotiate the price for any reason, it needs to be done by this point. You need to have full approval through your underwriting at this point as well. And this is really your last opportunity to cancel the transaction and back out before your earnest money goes hard, or before that earnest money would go to the seller. So this is your kind of last chance to be able to get that earnest money back. Tips for avoiding an extension: turning in your paperwork as quickly as you can. You want to make it a priority to address the items requested, and work closely with your loan officer and realtor to make sure that you understand what's needed and what's being requested to avoid having to ask for an extension on this deadline.
Okay, then your final is your settlement deadline. This settlement deadline is when you are going to be doing your final walk through the property and make sure that everything is in the condition that you want it. And this is about 1 to 2 days before you actually sign all of your final documents, your final closing documents. This is when, again, once everything's inspected, once you've done your final walkthrough, you'll sign your closing papers at the title company. Now, when you sign your closing papers, you should anticipate between 45 minutes to an hour. This is when the title company is going to sit down with you and explain everything that you're signing. Now, just a note, you will get a set of these documents a couple of days before that you can go through and review so that you're prepared when you go to closing with any questions that you might have. And if there are things that you have a question on before, you're always welcome to reach out to us and ask us about those, or reach out to the title company and ask those questions. It's important for you to be well informed before you go to closing. Now, at closing, you're going to be required to bring 2 forms of identification. Your driver's license is great, but we'll also require an additional form like a debit card. A lot of people use their Costco card, things like that. Just a second form of identification. And at this point, this is when all of the funds need to be settled. And so if your funds are going to be coming from an account with us, we'll take care of those transferring. But if you're going to be bringing funds from another institution, you'll be required to provide either a cashier's check or a wire of those funds to the title company. And just so that you know, once you sign all of your documents and everything is all settled at the title company, it typically takes about 24 hours for your deed to be recorded. And that recording is when it formally goes from the owner's name over into your name, and you're officially the owner. And that's when the keys are typically delivered to you from the agent. And we do have a lot of questions, and so I'm going to stop and answer just a few questions really quick. We have a question on, the question is, if the home is verified to have been a drug house or meth house, does the local federal government help financially, let's see, so does the local federal government, are they held financially to rehab it? You know, that is a good question, and I do not know the answer to that. I am happy to look into that. That was a really good question, Wallace. I appreciate that. I'm not sure what the obligation is of the government. I don't know that there is a specific. I know that they're required legally to disclose it, but I'm not sure what the obligation to clean it up is. So I'm not sure on that. And I will find out on that, Wallace, and get back to you on that. There is another question. Can someone else pay for my down payment? That's a really good question. You are allowed to have a gift of funds for your down payment. The gift of funds has to come from a family member or it's always a question. Family member, an employer can actually give you a gift of down payment, but it actually has to be transferred into you. The documentation on a down payment has to come, or a gift has to come from their account to your account, and we have to have that track record. We have to have that paper trail. So yes, you can get a gift of funds for your down payment, but it does have to be a true gift. Hope that answers your question. Thank you, Carolina. That's a good question. So back to the presentation. Once you go through this process, once you've gone through the settlement deadline and at this point, it's congratulations. You have officially, you're officially a new homeowner, and we're happy to help through that process. The final screen we want to do is show you how to get a hold of us. Now, I know you've all found us because you're on the webinar, but we just want to remind you, here are our mortgage consultants that work for us. And we're located throughout the Valley. And if you do have questions, please don't hesitate to reach out to us. Not only are we located throughout the Valley, but if there's a branch that's closer to you that we don't have a mortgage consultant, we would love to meet you there. We want to make it as convenient and as possible for you. So if you do have questions, reach out. If you say that you want to meet up at one of the university branches, we're happy to meet you up there. Just let us know what works the best for you. And again, you can find us at theucreditu.com. One more thing that you need to know, this 801-481-8840 number is a general number to all of our mortgage consultants. So when you call that mortgage number direct, it's going to ring at every one of our desks. So you're going to get a mortgage consultant. No need to call the general number for the UCreditU. This is directly to each of the mortgage consultants. So if you do have questions, this is a great way to reach out to us. And we're going to wait for just a minute more and answer a few more questions. For those of you that can hang out for a few more questions, that's great. And if you need to leave at this point, we understand. So there was a question that came up. Do we do financing outside the state of Utah? And Conrad, I'm going to have you handle that.
So unfortunately, the credit union does not finance homes outside of the state of Utah. We're restricted to Utah only.
Okay. And then there was a question, do we have, what's the difference between an FHA loan and a conventional loan? So just to give you a brief overview, FHA loans are government-backed loans, and they require a minimum down payment of 3.5%. Now, they also require mandatory PMI insurance on their loans for the life of the loan. So FHA tends to be a little bit more expensive, but it has its place. They allow you to go a lot lower on the credit scores than a conventional loan. So FHA allows for lower credit scores, a little bit more as far as the down payment, And sometimes overall the payment is a little bit higher. But we will run those comparisons, FHA versus conventional, when you reach out to us. We'll run a couple of different scenarios and help you kind of navigate through what works best for you. In the end, our job is to give you scenarios and you choose what works best for you, because in the end, you're the one that knows that. One of the questions, will this presentation be available for download? It is actually, Andrew, that's a great question. We do record these, and so you're welcome to go ahead and look at our website. There is a tab on the website that is webinars, and you can click on that and it will take you. You can find them there, and you can actually find them on our YouTube channel as well. Our YouTube channel, we download all of them. We do link a few of them on our website, not all of them. So if you want more information, you can go to the YouTube channel and find them there. Okay, just a reminder too. See, that's why James is here helping us. We will send a follow-up email to all of those that have registered. We'll send a follow-up with the link of the webinar so that you'll have that link right in your email. So one more question. I am a full-time college student. What would my income need to be in looking at houses around $200,000? That's a good question, Anthony. And because of time and out of respect to the others, I'm going to tell you that would be a really good thing to reach out to us directly, and we'll run some quick calculations. I will keep your information, and if you would like, we can reach out to you and give you those things. Conrad would be happy to run some, I volunteer him. He would be happy to run those scenarios for you and give you an idea of what your income would need to be. One thing I will tell you, Anthony, that brings up a good question. When you qualify for a mortgage, we qualify you off of a percentage of your income. We can't exceed about 43% of your income with debts. Now that 43% is going to include a lot of things. It's going to include not only your principal and interest payment on your mortgage, but it includes the taxes, insurance, if you have mortgage insurance, if there's a homeowners association, and any minimum payments that you're required to make on any other debt. So if you have credit cards or student loans, whatever those minimum payments, we're going to take all of those amounts together and we're going to keep it at about 43% of your gross income. So hopefully that'll help to, Anthony, give you an idea of what number we're going to use to determine what you qualify for. That's a really good question. So any other questions? Okay, it doesn't really look like we have any other questions. Again, we just want to say thank you so much for joining us. If you do have questions, reach out to us. We love working with our members. We're happy to help, and no question is off limits. Call us and ask us whatever you need help with. We're here to help you through the process. Good luck to you, and I hope you have a great rest of the day.